In today's lesson, we will discuss a very simple but highly useful tool that can provide valuable information to the trader. The indicator I am referring to is called Average Daily Range, ADR, which provides data on a currency pair's daily volatility. We will discuss how to use ADR to find hidden support and resistance areas on the chart, and how we can generate short-term trade signals from these levels. Average daily range of currency pairs. The average daily range shows the average pip range of a Forex pair measured over a certain number of periods. Traders can use the ADR to visualize potential price action outside the average daily move. When ADR is above average, it means that the daily volatility is higher than usual, which implies that the currency pair may be extending beyond its norm. The ADR can be helpful in setting targets for positions you are currently in as well. For example, if the ADR shows you that a Forex pair has an average daily range of 85 pips, then it might be wise to tighten up your target if a price move has achieved or is close to this expected range. The ADR indicator has a very simple output, and in most cases, you will see an additional text with the output values on your chart after you apply the indicator. The ADR indicator should show you a number for the end period's ADR value. We have a daily chart of the Euro to US dollar Forex pair within the MT4 platform. We have attached the ADR indicator to the chart. Although you might not see the tool, it is right there at the top left corner of the chart. It has been marked with a small orange rectangle. There are two values there. The first one shown with the orange arrow is the 15-period ADR, and the second one shown with the red arrow is the today's, last bar, ADR value. The 15-day ADR shows the number as 1,165. This value corresponds to 116.5 pips, and today's, current bar, ADR value shows 528, which corresponds to 52.8 pips. Keep in mind that based on your chart settings and particular ADR indicator, the manner in which you read the pip value may differ. Back to our example, the average daily move of the Euro to US dollar for the last 15 days equals 116.5 pips. But for today the Euro to US dollar has only moved with 52.8. This means that the Euro to US dollar has been relatively quiet today thus far. This can be valuable information to the trader regardless of the strategy employed. This can tell us that there is room for the pair to move and can help us set profit targets. Forex average daily range strategy example. Now let's look at an example ADR trading strategy. In the image below you will see a chart with the daily ADR indicator. This is the H1 chart of the US dollar to Swiss franc Forex pair for December 13th to 14th, 2016. The image shows the ADR indicator values at the top left corner. The ADR is adjusted to take into consideration 15 days. The two blue horizontal lines are the upper and the lower level of the average daily range. The ADR indicator we use here allows us to automatically plot the upper and the lower level of the ADR. The black arrow points to the beginning of the trading day. As you see, the price action starts a gradual move toward the lower level of the daily range. Suddenly, the price approaches the lower level of the range and touches the level. A bullish bounce appears afterward. Furthermore, a candle resembling a hammer reversal candle or pin bar has formed. When a candle closes above the high of the hammer, you could buy the US dollar to Swiss franc on the assumption that the price is likely to increase based on the weight of evidence that we have been thus far. At the same time, you would want to place a stop-loss order below the lower ADR level, from which the price bounces from. This is shown with the red horizontal line on the chart. Your trade is now protected. The target for this trade is the upper ADR level. Therefore, you should hold the trade until the price reaches close to this level. When this happens, you have two options: to close the trade and take your profit, or hold the trade in case a breakout occurs. In this case, there was a breakout through the upper level of the ADR, which can mean a reversal is pending. We at Prosperous 17 use institutional methods to trade and only use ADR to see what trading session to use. If London has provided a large move relative to the ADR, we can expect the New York session to be less volatile. However, the reverse is true. If London's session has low volatility, this can be the perfect indicator to suggest New York session is the best to trade. It is definitely one of the only worthwhile indicators to have on your chart for informational purposes. If you would like a free ADR indicator, please like, share and subscribe and we will send you one. Until next time, we at Prosperous 17 wish you a successful trading week ahead.